Ladies and gentlemen, welcome back to the channel. Here in this video, we are going to be going over Tesla stock, everything you need to know about Tesla's upcoming earnings, whether Tesla stock is likely to rally or fall close to $100 per share. If you're a long-term investor like me, you want Tesla stock to fall as much as possible. If you need your money here soon or over the next coming years, you probably want Tesla stock to do well. I think most people probably want Tesla stock to do well, at least for a period of time. So I will go over my expectations, what I think is coming on earnings. I am subject to be wrong, of course, but hey, I'm not afraid to share my opinions, and after all, that's the only thing of value on Finance YouTube. We will also be going over your economic data coming this week because there will be a bunch of it that will be important for markets as well as the rest of your earnings and my expectations there. How could big tech earnings affect the broader markets and thus affect Tesla stock? Hit the like button as well as subscribe to the channel. You know the deal. It's free 99. It costs you absolutely nothing to do so. And if you are excited for this upcoming week in Tesla earnings, whether good or bad, make sure to hit that like button and subscribe to the channel. Tell me all about it via that like button. So let's go ahead and get started with Tesla earnings. I think it's pretty clear Tesla stock, being the worst performer of the S&P 500 in 2024, sets you up in a more optimal position than not, okay? A lot of stocks are trading, big tech stocks, AI stocks, still with massive premiums compared to where they were just a couple of months ago. You're not really set up in a favorable position if your stock is trading at super high valuations and or prices. Today, Tesla stock is quite the opposite. It's trading at the lowest prices you have seen in a long time, and that could set you up in a better way than not. Now, there's a couple key things that will really be the driving factor of Tesla's earnings. Number one, do we get a constructive earnings call? Meaning, do we walk away with answers to our questions? Or are analysts just left kind of scratching their head after the earnings call, like the last four? That's been probably 25 to 35% of Tesla stock sell-off, as we just don't have any clarity what's going on with the business. We have no understanding of the pricing strategy from Tesla, or if prices are ever going to go up again. We don't know anything, right? The uncertainty is crazy around Tesla, whereas other stocks, even if they're faced with challenging times, will come out and say, yeah, we're not doing well right now. We expect to do better in the future, blah, 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 whatever the scenario is. There's just not a lot of clarity with Tesla. So I'm hoping there is, as Dan Ives says, an adult in the room, this earnings call. If it's good or bad, I really don't care. I just want to know some clarity, what Tesla is seeing on the ground, what their expectations are going ahead. If we do get a constructive, good earnings call, like it doesn't even have to be good what they say, but just answer some questions in a constructive way, that will be a positive for Tesla stock at this point. And that's probably not priced into the stock, given the last four earnings calls have been complete disasters. Number two, I think you can kiss the earnings themselves goodbye. EPS, revenue, it's all gonna look bad. Okay, that's not what's going to move Tesla stock. It's all going to be about forward-looking guidance. So I don't want to focus on EPS or revenue too much. It's not gonna matter. It's not gonna. It's so irrelevant, because markets don't care about what happened already. We already know it's going to be bad. It's about what is coming next for Tesla. On that note, there's a couple different things to consider. I thought price cuts were done. Obviously, they are not. And I do think Tesla stock's probably going to sell off a little bit on Monday at the bare minimum. That could set you up again in a more favorable position. If the stock sells off into earnings, it's more likely to rally after earnings. We want a little bit more clarity on how bad margins could get. How bad is the situation going to get for Tesla? Now, I will also tell you right now that one of the biggest positives we could hear on the earnings call is the FSD take rate is going higher. Markets love subscription revenue. It tends to be stickier, and I think that could be positive. Now, Tesla's not going to have any definitive numbers to really point out to us because the free trial is still going on. I'm sure a lot of people are going to, wait until the free trial is over with to actually go out and purchase FSD. But the number one biggest thing that will move Tesla stock comes down to the Model 2. And in the last video, I shared a clip from Dan Ives, and he explained it very well. But from Wall Street's perspective, like, Dan Ives is bullish on robotaxi. Dan Ives, one of the most, highest price targets on Tesla stock. He's bullish on robotaxi and autonomous vehicles from Tesla, but he even thinks that is 6 to 7 years away. 6 to 7 years. Let me tell you right now, if you're bullish, one of your most bullish analysts on Tesla believes robotaxi 6 to 7 years, if Tesla can come out and say, yeah, we could be launching the robotaxi network in the next 12 months, that would be a huge positive. A huge, huge, huge positive. And that might help fill, as Dan Ives says, the void of growth that we could see here, if indeed the Model 2 is not coming until later. So basically the way that I'm looking at this is either if the robotaxi comes sooner, that can provide the growth that we need for Tesla stock to go higher. Or if consumer deliveries of the Model 2 come, that could support the growth for Tesla stock to go higher. But if you don't have either one, that's a problem. For an example, if Elon comes out in the earnings call and says, we're going full tilt on autonomy, on robotaxis, but we have no idea when they're going to launch. Markets are going to take that as Dan Ives is correct. 5, 6, 7 years away. And if Elon comes out and says, yeah, we're going full tilt on the robotaxi, the Model 2, it's not canceled, but it's not coming soon. It's going to be years. Yeah, that's your worst case scenario, okay? That is your Tesla stock is going to $100 per share. In that's a base case at that point, okay? Because you're going to have years of no growth for Tesla. And the markets, they look out, right? 12, 24 months. But if it's going to be like 5, 6, 7 years for some growth, markets are not going to want to pay up current market multiples for Tesla. That's a fact. So I think from the perspective of Tesla stock, you need one of two things. One of two things, that's it. You need either the robotaxi coming soon, like next 12 months or so, which, again, I expect the same timeline is going to hold true. Elon on the last earnings call said Model 2 coming second half of 2025. I think instead of the Model 2 for consumers, it's going to be the robotaxi. Question is, are you going to be able to launch a robotaxi network alongside that? If the answer is yes, and the robotaxi is coming in the next 12 months, great. The growth void is filled. And that would be way better, way better than consumer deliveries on the Model 2. Or the other thing you need to get Tesla stock to go higher is the robotaxi still coming in the second half of 2025. If you don't get robotaxi or Model 2 in the second half of 2025, if not the beginning of 2026, I'll go out a little bit, maybe beginning of 2026. Yeah, Tesla stock will go higher if either of those two things happen. If none of those two things happen, and there's a lot of uncertainty, the timeline of the robotaxi network or the timeline of the Model 2, Tesla stock's going to fall. I think that's as simply as you really need to look at this situation. That's all that matters. That's Tesla, Elon, they're playing a super long game here. And if you're not prepared for that super long game, I think probably selling Tesla stock now is the best choice for you. You need to be prepared to hold Tesla stock and potentially buy Tesla stock if it goes lower from here. Now, just using my better judgment, judging off of the last 4 earnings calls, I don't know what's going to happen, okay? I don't. Now, the other part of this, I know I mentioned the two things, right? Robotaxi or Model 2 coming second half 2025 or beginning of 2026. I mentioned in other videos that if Tesla focuses on profitability now, that could also help Tesla stock do very well after earnings. And focusing on profitability would be no longer cutting prices, just letting deliveries be what they are and bring in the best margins you can per vehicle. Tesla's not doing that. Okay, Tesla just cut prices big time on Saturday and today. Saturday was in the US and today, Sunday, was in China. So it doesn't look like Tesla's going to be focusing too aggressively on near-term profitability. So you don't have that anymore that could bail out a longer timeline for the robotaxi or the consumer Model 2. So it all really hinges on when the robotaxi is coming, when the Model 2 is coming. That's it. Now, if Tesla does come out and give definitive guidance on margins or deliveries, that would be good. That would show Tesla has a little bit more confidence in the way that 2024 is going to play out. But I'm going to be honest with you guys. following the price cuts from Tesla this weekend, I don't know if Elon is going to definitively say the robotaxi is coming in the next 12 months. And I think that's important because Tesla, I believe, at least, we may or may not get more clarity on this. I believe Tesla is looking to do the robotaxi to manufacture that in Texas and then do large-scale commercialization, if you will, of the Model 2 in Mexico. Mexico is going to be years until it's fully built and scaled. Texas could happen relatively soon, 12 months or so. You could definitely have a production assembly line going for the Model 2. I don't know if that is what we're going to hear, though. Maybe, maybe not. And if, unfortunately, we have a bad earnings on Tuesday, not necessarily EPS or revenue, that's going to be bad. Just prepare for that to be bad. It's not going to matter for Tesla stock. But if we don't get definitive guidance, if we don't get, answers to all of these questions we have, Tesla stock is likely falling down to $100 per share. The problem is here, you don't have a lot of support. You don't have a lot of support at $147. And as Dan and I have said, really having a disaster earnings call, not getting any guidance, having a void of growth for the next coming years, it could cause Wall Street to re-rate the stock, to send the multiple lower, because still, Tesla's currently trading at about 55 times PE. During this whole decline, the PE multiple has stayed roughly the same. Roughly the same. It was at like 65 prior, but it's been roughly the same. And that was, as you started 2024, right? 2023, it was like 65 times. The EPS estimates have fallen. That's what's caused Tesla stock to fall. But let's say you do get the multiple falling. Let's say the multiple falls to 40 or 45. Let's say 45. Let's say you get a re-rating, multiple falls to 45. Let's say EPS estimates are around $3.15 or so for this year. That's Tesla at $141. Let's say EPS estimates fall more. Let's say in Adam Jonas or Gary Black's estimate is true, and you come in at like $2 of EPS for this year. Times a 45 multiple, $2, you're at $90 per share. That's what could happen, right? A re-rating, a lowering of the multiple, okay? You need to be prepared for that. I mean, take a look at what Elon Musk just said to Zero Hedge. Zero Hedge says Nvidia is down $213 billion today. Round of applause for Musk. He says rookie numbers. Well, yeah, that's because Tesla has fallen $700 billion of market cap value since 2021, but hopefully this is not kind of foreshadowing what could happen to Tesla. It's honestly hilarious, like rookie numbers. Oh. Now, all of what I just mentioned, I think that's the only thing that really matters with Tesla's earnings. Service, revenue, full self-driving take rates, energy, all of that's going to have a minimal impact to Tesla stock, given what I just said, right? The Robotaxi Model 2, that's it. That is it. Any definitive guidance, margin guidance, EPS guidance, revenue guidance, delivery guidance, all of that will be good as well. But this all hinges on the Model 2 and the Robotaxi. When are they coming? That's it. That's all. And I don't know if I can definitively say that Elon's going to guide for the Robotaxi network second half of 2025. It's possible. It is possible. But I wouldn't lead with that as my base case. Now, I do think Elon's going to throw out some comments on the earnings call. I think that's a safe assumption of the progress of FSD, what the future is going to look like for FSD. But and maybe he does say, 2025. But I don't think the markets are going to take that as definitive guidance unless it's in writing, unless it's in the actual statement that comes out when Tesla reports their earnings. If that's the case, and it's in the statement itself that Robotaxi expected second half of 2025, then Tesla stock does well. But I don't think Elon throwing out some comments here on the earnings call, I don't think he has enough credibility on his timeline for the markets to, in a meaningful way, actually react to that. But if they put it in numbers, or on paper, I should say, that's what I'm going to be watching for. Now, coming this week, you're also going to have a lot of big tech earnings. I went over the earnings calendar in the last video, so I'm not going to do so too much here in this video. But you do have Meta, you have Microsoft, and you have Google that report earnings. Meta is on Wednesday, Microsoft and Google on Thursday. Now, these stocks, Meta, Microsoft, Google, they're trading at or near all-time highs. Near all-time highs for all of them. None of them are at all-time highs. The expectations that go along with that are high. Very, very high. And there's a lot of room for disappointment. Whether it's like Netflix, dude, come on. Netflix beat their subscriber estimates by over 45%. They had a $20 million lower guidance than Wall Street was expecting. Boom. Stocks down 8-9%, whatever it was down. Even JP Morgan, right? JP Morgan was trading at near all-time highs. Markets were expecting JP Morgan's net interest income guidance to come in at $93 billion. They didn't change it. They just left it at $90 billion, and the stock was down 6%, and that was a big bank. Let alone if Meta, Microsoft, or Google miss on earnings somewhere or provide, lower guidance. What could happen to those stocks? Well, it could be rough. And that's kind of my expectation is, expectations from Wall Street are just way too high for big tech to hold up these gains that they have seen. Now, you also had SMCI that came out on Friday, confirmed their earnings day, but they did not pre-announce. The first time they have not pre-announced in 2 years, presumably meaning they're probably going to miss on earnings. The lack of news was seen as really bad news, and that's why semiconductors sold off. Now, you will also have Lam Research coming this week, and that one could be important for the overall AI story. And I do think it's likely semiconductors continue to sell off. I think it's likely big tech continues to sell off, but keep in mind the NASDAQ, this is one of the more aggressive sell-offs you have seen in recent years. And the NASDAQ's RSI went from 57 down to 29.78 currently, so oversold on the RSI in a really quick period of time. So odds are you do get a short-term bounce here, maybe Monday, maybe Tuesday. I'm not sure. Wednesday, Thursday, towards the end of the week, that's where things could get a lot more volatile to the downside, in my personal opinion, especially if Lam Research, Meta, Google, or Microsoft miss on earnings. And take a look at this. Tesla, out of this week, Tesla is the highest expected move, plus or minus 10+%. Yeah. And what I found is that, at least last earnings season, whatever the market makers were pricing in is what happened. Okay. Very rarely did a stock move less or move sometimes more to the downside, especially than what the market makers are pricing in. That's because the market makers, they want to protect themselves. That's why they charge a premium before earnings. And Tesla is pricing in the most here, over 10%. So you're going to get a good big move from Tesla, that's for sure. Meta's pricing in 9%. Google's pricing in over 6%. Microsoft pricing in about 5%. So you're going to get a move this week. It's going to be a large move for the markets. You do also have some data coming out. Coming on Monday, let's see what we have. We have Chicago Fed National Activity Index. That will be at 8:30 in the morning. That could move the markets a little bit, but those don't tend to move the markets all too much. EU Consumer Confidence. And then on Tuesday, you are going to get Richmond Fed Manufacturing Index, Richmond Fed Services Index. That service index could be a little bit more important. And that's it for Tuesday. Wednesday, you are going to get durable goods orders month over month. You're expecting 2.5%. Now, if durable goods orders come in really low, like a negative number, then that's a bad sign for the economy. If durable goods come in at 2.5% like we're expecting, that means the economy is probably doing okay. So that is your first big data that we're expecting this week, and that will be on Wednesday. Now, on Thursday, you're going to get GDP growth rate quarter over quarter advanced estimates for Q1. You're expecting 2.5%. Last quarter was 3.4%. So you are expecting a slowdown here. And again, if GDP comes in high, that's great. If GDP comes in low, that's bad. Because markets, they're always going to care about a recession, about the economy, more than the Fed or inflation. That's why the markets have done pretty good in 2024. It's not because the Fed was rushing to cut rates. It was because the economy was doing well. And if the economy is doing well, then market participants, investors perceive that earnings are going to come in good because the economy is doing well and people have jobs and they're spending money. So the economy slowing down is going to be bad news when that does happen. And I don't know if it's going to happen soon or sooner rather than later, but eventually it will happen. You will also get retail inventories, wholesale inventories, initial jobless claims, goods trade balance, and a couple other smaller data points coming out Thursday, but that GDP number is the big one. And then on Friday, your biggest data of this entire week. And of course, it has to be on a Friday. I hate when this big data is on a Friday. I much prefer this to be on like a Tuesday, but nonetheless, I don't choose when it comes out. Coming in April 26th, this Friday, you will get core PCE month over month, expecting that to come in at 0.3%, unchanged from last month. Personal income month over month expected to rise 0.5% month over month. That is higher than your 0.3 number from last month. Personal spending month over month expected to decline a little bit from 0.8% last month to 0.6%. So you want to see personal spending come in as high as possible, because that means, again, people are spending money. That's going to drive earnings growth in the S&P. And that's valuation support for the markets. We'll see, though. To some degree, personal spending coming in really high could be seen as inflationary. Same with personal income. If personal income goes up a lot, that is an input cost to companies. When companies' input costs go higher, just like what's happening with commodities, right? Oil, input costs, cocoa, like chocolate. Yeah. Look at that chart sometime. It's absolutely insane, but that can lead to more inflationary pressures as well. You will get final numbers for the Michigan consumer sentiment as well on Friday at 10 o'clock in the morning, but this data will come out at 8:30 on Friday for PCE, personal income, and personal spending. And I think odds are markets continue to fall. I do think by the end of this week, you're probably going to get a larger drop than a potential rally. Again, because even where stocks are at right now, look at this on a weekly chart, you're still priced for a pretty optimistic scenario. But look at that last week candle. Nasty. For the NASDAQ, that was a 5.39% drop. That is the biggest 1 week drop you have seen on the NASDAQ since what? I mean, you got to go back here to September of 2022. And the last time you had that kind of a drop, you ended up dropping about 4.6% the week afterwards. So yeah, this is definitely a huge fall we've seen so far. But I do think there's probably more left because expectations are still up here. The reality's probably down here. Maybe down here. We'll have to wait and see. So I do think that could set you up for a little bit more downside. But again, I am expecting some kind of bounce at some point next week. That's just how markets work. But I don't think you're going to break above that 100-day moving average. If you do, that's where things start to look a little bit better. Maybe you can continue to trend upwards at that point. So you really want to be watching your 100 and your 200-day moving averages. I think inevitably you're going to fall to that 200-day moving average. If that happens this week, holy moly, that's going to be a big ass fall. Okay? Probably not, though. It's probably going to take a couple of weeks to get down there. But we'll see. Maybe NVIDIA will be the event for a market that either breaks things or sends things to the moon again. Bottom line with Tesla, though, before we go ahead and wrap up this video, Tesla stock, if we do get the robotaxi confirmed second half of 2025, if I am correct and the timeline stays the same for Tesla, then you likely go back to the 180s, 190s. And you could see a 20+% move following earnings. On Wednesday, Tesla stock could be up 20+%. If we don't get any definitive guidance for the robotaxi or the Model 2, well, Tesla stock could likely fall 20% after earnings. I think you can see a huge move here. A 20% down move from here would put Tesla at about $115 per share. 20% up move from here would put Tesla stock at about $175 per share. And I do think you'll see a follow through as well. If things are just really bad, Tesla stock falls big after earnings, you're probably going to trend back down to $100 per share. That's really, where I think Tesla's going if you have bad earnings, if things are bad. A re-rating is coming at that point. If things are good, then that'll prove that markets were too bearish on Tesla, and Tesla is likely going back to the 180s, 190s, if not over $200, depending on what they say and what kind of guidance they do provide. So yeah, I'm expecting this could very much be I hate to use the words, but make it or break it quarter for Tesla. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.